Hello, everyone. Good evening and compliments of the season to you. I welcome you to another video tutorial where I will be taking you through an interesting but simple setup that we can actually use to take advantage of a potential trading opportunity during the new week. But before we go into the details of what my expectations are, I would like us to take a quick review of the key moments that we had during the course of last week's trading session. And talking about last week's trading session, this was how the week started for us on the USDJPY, as we saw how price action initially got trapped between the 133.40 level and the 132.850 area. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out or break down of the channel for a potential trading opportunity. And with our stop order placed at both ends, we had the breakout of the 133.400 level trigger our buy position, and it was at this point we had our first buy position for the week. And as you can see here, we had a little consolidation phase around that area as it took some time for price action to give us a sense of direction of where it will be going. And the fallout from our morning live session on Monday was that we are going to be ensuring that we secure the current position with the hopes that price action will break out of the 133.750 for another opportunity to add more position to our existing trade. And we also included that if we at any point in time sense a breach of the 133.40 level, which also shares a confluence with that bullish trend line, this will be a beautiful signal for us that there is likely going to be a momentum shift, hence we are going to be preparing to sell below the 133.4 level. So with the sell stop order below that structure, as you can see here, we had price action triggered our first sell position, taking us out of the buy position at a worst case scenario of break even. We also had opportunities to add more position at the breakdown of the 132.850, and price continued to ride all the way to the downside here. So at the first half of the week, we saw how price action has chosen the bearish path. So on Tuesday, we saw the situation here whereby pressure began to come in, and our center of focus was around the 132.850 and the 132.500, obviously where a breakout will welcome buying opportunity and the breakdown will welcome a selling opportunity. But at this point, I made mention that for us to buy at the 132.850, we want to see a significant breakout retest of that level for us to join. I explained this in detail on my YouTube morning live session for that Tuesday morning. And as you can see what happened here, we saw another setup here which I quickly identified on the 15 minutes time frame. And what did we see here? We saw the breakdown of the 132.600 level to welcome that sell position as price action continued to the downside. And on Thursday, I think Thursday or Wednesday, we had a consolidation phase here between the 131.800 and the 131.4 after price was caught within that channel for I think about 18 hours thereabout, and a breakout retest will definitely be welcoming a trading opportunity. So we saw what happened here. Price action broke down initially, and because of the sharp rejection of that structure, I told us all at this point that we should manually close the sell position and set another re-entry sell stop order below the 131.400. And look at what happened. We had a re-entry, recouped the loss we had there. Price action moved, and we begin to see buy pressure resume after identifying a potential reversal pattern where the 131.400 level is going to probably turn out to be the neckline of that reversal pattern. So the fallout from our live session that day was that we are going to be buying above the 131.400 level if price action ever breaks out of that structure. And as you can see what happened, we saw the breakout of that structure. We waited for more opportunities to add more position, and we continue to ride the move all the way to the upside, as you can see here. So if you do want to have a look into this personally, well, I will be dropping the link to this commentary right in the comment section of this video. And for those who are watching this on my YouTube channel, you will be seeing the link at the top right hand side of your screen. Now, diving right into the current market structure, the first thing we normally do is to ensure that we have an holistic perspective of what is really going on in the market. And as a result of this, we want to be looking at a daily time frame to capture what is really happening from a long-term perspective. Now, when you look at the daily time frame here, you would observe that the structure we have here still remains the same with what we have been using in the last couple of months now, where we have a strong accumulation area between the 131.00 level and the 127.00 area. And in fact, this whole phase has lasted for about 9 to 10 months in this market, where this level is now characterized as a very strong buying niche in this market. However, if we zoom out here, you will see something that looks more like a reversal pattern in the form of a head and shoulder pattern. If you look at the structure critically, you'll see we have the right shoulder, we have the head, and we have the right shoulder rather here. But one thing you will notice is that for instance, if you are looking at a valid reversal pattern, we want to see this area here serve as a neckline for that structure to mature, where the breakdown retest of that level will be welcoming an opportunity to sell. But one thing obviously has been happening in this market for quite a while now is the fact that the 131.00 level has been a strong buying niche in this market. And since the beginning of this year, we have seen how sellers have tried multiple times to break down that level, but it has been met with strong resistance from the buyers. And now, if we zoom into the current structure to look at what has been happening in this market on this chart, you will see a situation here where price action broke out of that bearish trend line, which falls and lines up exactly with that theoretical understanding that after a breakout of structure, we expect that price will do the retest of the structure, which is the trend line in this case scenario. And since then, we have been witnessing buy pressure around that area with the hopes that price action will continue to the upside. And if we take a further zoom into that impulsive move that brought price back into the 131.00 level here, that happened at the beginning of the month of March. You see the impulse leg here dropping into the 131.00 zone area, which I said earlier is a strong demand zone for participants in this market. We saw price climb up into the 133.50 level during I think a couple of weeks ago we saw the situation here, and during the course of last week's trading session we saw price action dip into the 131.00 level. And if you look at this closely, you will notice that price action is finding it difficult to find a new low. As you can see here, price is yet to break down the previous low in this market, and immediately price action tested the 131.00 area. What did we see? We begin to see the resumption of another bullish momentum coming in from that area, which is peculiar with whatever has been happening around this area in the last couple of months. And with the situation here, this is likely going to be transitioning into a potential reversal pattern in the form of a double bottom structure. Though this is not yet confirmed yet, but it's likely that price action could transition into that area. And if we cite something like a reversal pattern like this, you know the next thing we want to be doing is to identify a neckline which shall be serving as a platform upon which we are going to be buying. So with the neckline sitting around the 133.500 level, which has been a major determinant of price action here in the last 5 to 6 weeks in this market, I'm of the opinion that a breakout of the 133.500 level will be giving us a valid reversal pattern where buying pressure above the structure will be welcoming an opportunity to buy. Now the question is going into the week is, are we going to be waiting for price action to break out of the structure before joining that bullish move? If we look at the distance between where price action is currently and the neckline area, we have a whopping 130 pips in that regard. So are we going to wait the whole 130 pips before we could join the bullish momentum? Well, that question will be answered on the 4 hours time frame, where I was able to identify and spot a very simple setup that we can use to catch a potential bullish momentum if it so happens during the week before we actually sight the breakout of that neckline. So before we go into the details here, let's keep tabs with the fundamental aspect of the market so that we can see the macroeconomic event that we shall be looking forward to, that will be definitely bringing some liquidity into this market to drive price action in our favor. So in that regard, I will be moving on into the economic calendar, and I was able to spool out a series of macroeconomic events. So we shall be focusing on high impact events that will be affecting both the US dollar and the Japanese yen for this week. Now for the new week, remember Monday is a public holiday, so we shall be starting from Tuesday, and the first major event for the new week is coming in on Wednesday, April 12th. And the first one is the Consumer Price Index, which is a measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and services. The data we have here, the previous data we have here is 0.5%, and we're expecting a consensus projecting a 0.4% at this point, which is a little bit on the downside, and we shall be looking forward to what the actual figure is going to be. And on that same day, we have the FOMC minute coming up that later on that day, and this minute is released by the Board of Governors of the Federal Reserve and always gives us a clear guide into the future interest rate policy for the US economy. So these are high impact events that we shall be looking forward to this week. Then another one wouldn't come until Friday, and that is the retail sales, which measures the total receipts of retail stores, and we have a minus 0.4 the previous data, and there is a projection of another minus 0.4 on that one. Then finally we have the Michigan Consumer Sentiment Index, which is an index released by the University of Michigan, and it is a survey of personal consumer confidence in the economic activity. It shows a picture of whether or not consumers are willing to spend money, and these are events we shall be looking forward to, and obviously everyone in the market will be anticipating this event, and we shall be seeing the reflection of this anticipation on the chart as price action. So with that being said here, let's dive back into the 4 hours time frame to look at things from a technical standpoint as we get ourselves prepared to take advantage of a potential trading opportunity. So like I said here, we are going to be scaling down into the 4 hours time frame, and this was what I was able to identify on the 4 hours chart. So if you zoom out of the structure, what I did here was to take into consideration price activities since the beginning of the month of March, and obviously what you will see here is that price action has been on a bearish move, and when you connect the series of lower highs, you can see the bearish trend line, further emphasizing the strength of the sellers at this particular point in time. However, we can see here, since the later part of the month of March into the first week of this month, we saw some attempt by the buyers to take out the continued selling pressure in this market, which has resulted in a higher low, giving us a temporary bullish trend line in that regard. So despite the fact that we are seeing lower highs in this market, the higher lows here is actually limiting or reducing the seller's momentum here, as you can see that the impulsive move to the downside is gradually reducing. So at this point, we are at a critical point here where price action is currently trading around the 132.400 level, which also shares a beautiful confluence with that bearish trend line. So going into the week, we shall be using the 132.400 level as a yardstick for trading activity, as it will guide us into identifying potential buy or selling opportunity. Now the question is, how do we intend to take advantage of a trading opportunity from this current market structure using that key level at the 132.40 level? Now, what I want to be doing here, let me zoom it in so that we can see things clearly at this point. So this is the 132.400 level, and look at what happened here on Friday. We saw sharp rejection of the 132.400. Now the question is, will price action respect the bearish trend line one more time? So what I want to see here to sell is if continued selling pressure resumes below the 132.400 level, which also shares a confluence with the bearish trend line, and we might be looking forward to more selling opportunities, where a breakdown of this bullish trend line will be welcoming more opportunity to sell. However, if price action breaks out of the bearish trend line and the 132.400 level, at this point I will see this as a signal that the bearish trend line may no longer have the capacity to hold bearish momentum anymore. And what I will be doing here is to scale down to my lower time frame, look out for retest of structure or buying pressure above this level to join a bullish momentum to the upside. And as you can see here, like I told you on the 4 hours time frame, we would have joined a bullish momentum early enough before it even breaks out of the neckline. So we at this point will have maximized the profit on that buy position, and after which a breakout of the neckline happens, we want to be adding more position to our existing trade. So these are my views here on the USDJPY for this week, and at this point I will be pausing this video, as be rest assured that I will be with you in the comment section on my TradingView platform. After monitoring, our participants in this market will be reacting to the structure during the early hours of the week. I hope this video has been of immense help in making your personal decision on the USDJPY, and if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Sherry, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching, and I look forward to seeing you right in the comment section as usual as we get prepared for the new week. Do have a wonderful evening, everyone. Compliments of the season. Bye-bye.